Welcome to our last workshop Wednesday for 2020, and today we thought it would be a good idea to do the year-end review because you have one more day. You have one more day until this year is actually ended. So, Carrie, you created this checklist some time ago, and it still holds true today.
It's timeless,
right? Or as we like to say in the content side of things, it's evergreen.
Evergreen. There you go. That's
like
fancy.
The tree behind me, but that's fake. So even though, okay, so tell us a little of the history of the checklist that you created.
All right. So when I started way back and dinosaurs roamed the earth, and I got my certification, became a CPA and everything, I worked in a CPA firm, and the best lesson that I ever got was from my like a mentor who happened to be my boss. And he said, Carrie, if the balance sheet is wrong, you cannot count on the profit and loss. And so I was confused. I was like a deer in the headlights. I still, get a little nervous saying balance sheet. And we created a course because it is not something you learn overnight. It's something you work on. And what he explained to me was you want to make sure that every balance sheet account that you understand it, that you can write the book on it. So I started with the bank account and went down the balance sheet and created this year-end checklist of what to do to know that your balance sheet is correct so that this mysterious P&L is accurate. And back when I first started doing it, I used to make a notebook because back then we didn't have all this technology. And so that when I would walk in and he's ready to do his tax side of things, and I was like the financial reports are ready, I had backup that said, this is how I know that the balance sheet is correct. So that's how this was written, because it was really something I scratched out on a piece of paper.
Gotcha. So we are going to put a link to this this resource guide, this year-end checklist, in the comments of the video here. So let's just make sure.
And in addition to, making sure your balance sheet is correct, this is a really good time to, if you have any downtime, make sure your 1099 information is up to date. That if one of your subcontractors has changed their entity or changed their address, you want to get all that stuff done now. So when you have your final numbers, you can actually get that done right. Employee records, make sure everybody has moved this year. Why, I don't know, but they have. Make sure in your records and whoever's doing your payroll that you have the right mailing address, because it's a nightmare to fix later.
Got it. So the major areas we'll put we've done some workshops on some of these things, and we are. We'll put the links to those workshops, so we're not going to go into great detail about everything that's on this, but we just want to kind of highlight. So, step one, review your bank reconciliations. That's a huge part of buttoning up your year end and making sure that the banks tie to what's in QuickBooks, because you're going to see things bubble up to the surface of overstated income versus, changing their workflows, and then going to accounts payable. Talk a little bit about what you do in the accounts payable, just making sure that bills are paid.
Right. So the big picture, looking down, when you do the bank rec, you want to make sure all those outstanding items are right. You don't want to hold on to something that's old. Accounts payable, make sure that everything that is unpaid as of the end of the year is accurate. It's okay to pay stuff in January. Just make sure that's accurate. And accounts receivable, make sure if there's anything you need to write off, do it in this tax year. Don't mess up prior years and handle all that cleanup work. You can go ahead and have those discussions now. If you have to meet with the owner and say, which one of these are you going to write off? Go ahead and get all those handled now, so that when you're rolling into January, you can just hit the ground running.
And the big part about year end is the 1099s. So and this year is actually very important because there's a new 1099 in town, which is actually an old 1099, but it's a separated 1099, and there are things specific to QuickBooks that you want to make sure that you've set up properly to be able to do that. So there's a 1099 NEC, which is non-employee compensation, which in the past was just box 7 of the 1099 miscellaneous. So if you do both, the 1099 NEC form and the 1099 miscellaneous form, you have to separate those accounts. You can't have the same account go to both. So there's a resource that we'll post about doing that as well. But 1099s is always a very confusing part.
Check your mapping in your
headache for you, right? Because you have all these 1099.
Yes.
1099 contractors that you have to work with, and they move or they change their entity or something like that, and you have to follow up with all those. So 1099s for your clients are also a big thing and a great service that you can offer as an accounting or bookkeeping professional.
And luckily, I looked at it yesterday. You have to go in those preferences and map that properly. So make sure your chart of accounts is in good shape, and then unconnect it, and then go in and remap it, because it'll make much more sense later. You can't just hope that what you set up last year will work. You have to go touch those. So build in some consulting time. Give your clients a heads up that they're going to need your help on that.
Got it. And then we have, of course, the receivables, which is just the opposite of the payables, making sure everything is tied together. Employee records. Talk a little bit about that.
Yeah, so employee records, you might want to double check. I mean, the bare minimum is, did you move? Is this your social security number? And then, maybe get them to fill out another W-4 to see if there's any changes for the January. It's just a good time to touch base with them about it. If any of your clients need to run a payroll, year-end payroll, or have paid cash out, go ahead and run that through payroll before they switch over to 2021. Maybe too late, but do what you can to catch them.
And then sales tax. Sales tax is a big thing, buttoning up that.
So if sales tax is not set up right, there's a huge cleanup in that. But at the end of the day, you want that payable to be equal to what you're gonna write the check for in January. That's as of the end of the year. And same with payroll liabilities. Those are the numbers that you want to just make sure they match the check that you're going to end up writing, or ACH, or however it's going to be. You want to make sure that it's smooth sailing when it gets paid the next month.
Got it. And then you have expense records. Review expense records to make sure all major purchases are capitalized and not expensed.
So first thing I recommend is pulling up a P&L and clicking details under miscellaneous and office expense. That's where these things get hidden. There's you'll know your client's way of coding things. I had a client that had one called salesman expense. Let me tell you, those are 1099s. And they were like, no, we've always been able to do it. I mean, you can only do what you can do to help guide them, but go up in there and see if there's any items that need to be depreciated, if there's anything that needs to be 1099 or quickly added to their payroll and moved out. But go in those, pull a P&L last year and this year and see which accounts are way off. That's where you're going to find these hidden gems.
Got it. And then depreciation leads right into that. So if you've capitalized that, doing your depreciation is a key part of that. Because accountants love depreciation. That's just money out of creating money or an expense out of thin air. Right.
Out of thin air. So it doesn't make any sense to us, but we do whatever the depreciation schedule says. Make sure your accounts, your accumulated depreciation on your balance sheet's accurate. And when you do that P&L last year, this year, you'll see if that journal entry is missing, which it usually is. Usually the journal entry you should have done for last year hasn't been done. So tie down your balance sheet from last year, to make sure you're starting off with good numbers. and then start working on the current years. And obviously tomorrow's the last day and you don't have all your information, but you can do a dry run, through November, to start to check and see if things are on course.
Then right in the middle, you have this thing called retained earnings and owner's equity.
Yeah.
That is the one thing that QuickBooks does automatically
Don't overthink
when it comes to year end. Yeah, I mean, whatever your fiscal year end date is, it will just take the net income and move it to retained earnings. There really isn't anything that you should be doing that, and you shouldn't be touching retained earnings unless under
guidance,
and
expert, QuickBooks expert, right, to help you to make sure it's done right. Again, if you're going down your balance sheet and everything's accurate, the retained earnings should work, but we know that that's not the way things are. So you have to do some magic with that.
Right. Inventory.
Inventory. We have got to make sure that your customer is doing a physical count and make sure that they've set it up right, because you want to print that out. I think with the beauty of QuickBooks Financial, you can always have that work as of the end of the year, but point of sale, it marches on. So make sure you print out what it is as of the 31st, and you'll have to do some magic behind the scenes on that. But it's not something you want to skip. Now you can always spot check throughout the year and make it right, but you want to make sure that you have a nice inventory summary with the quantity and the average cost to give you your value, and that ties to your balance sheet. There are things that it can do. If you inactivate an item code in financial, it's going to mess up your balance sheet. So make sure that those two numbers match, and reactivate those item codes that shouldn't be there, but they still have value and money on them. You've got to clean that up and get those off so that those two numbers tie. That's a big, huge one. If inventory is overwhelming, you've got to bring in an expert. There's not every single pro advisor is an expert. I don't know what percent is, but you want to bring in somebody that, like this fella, like Dan, you want to bring someone in to help you make sure your inventory is right.
Yeah, I mean, I actually work with a nonprofit and actually do their inventory, and that's a great experience of going in and actually counting. And I use great in the sarcastic way to actually go in. I mean, it's very busy work, and there are things that you can do to help speed that up. But it is a manual process of actually physically counting the inventory that's on hand, and then marking that back into your QuickBooks. But you want to do that before the year end, or at least date it the year end before you file your taxes, because if you don't have an accurate count, that impacts your balance sheet, and it impacts the expense, especially if something was broken or stolen, or what QuickBooks says on hand may not be what reality is. So that's just really tying that all together. You have a little blurb here about payroll tax liability summary. That's like a big Pandora's box,
Yeah. So when I touch payroll and I go to a new client, in order to figure out if anything is off, like at year end, you want to pull your 941. You want to know what the last amount was paid for federal taxes. That will be paid in January, unless everything happened to be done by year end. You got the same thing with your state. You want to look at that reconciliation for the year end. You want to tie down those numbers so that they go back to what was paid. And if you go into the item code for payroll and you map it properly, it's a whole lot easier to find. So I take payroll liabilities and I create sub accounts for the 941, for the state, for the unemployment state, and the unemployment federal, those 4 at a minimum. And I make sure that they flow in and out properly. Often there's a mistake where people withhold health insurance or they withhold whatever. Make sure that those are netted out to the company's expense. It builds this whole big ugly balance sheet item that's not even real. It's basically the company paid the health insurance and you're paying for part of it. Net that thing down in the P&L.
Yeah. And, that opens up a whole lot of questions or misconceptions about the liability versus the expense of payroll. When you do create a paycheck, there are some that are liabilities and some that are expenses and some that are both.
Yep.
As far as the accounting is concerned, and that also ties back to sales tax.
Same,
I love the story. I have a friend that used to work at the Department of Revenue, and every month she would always have a business owner who would come in and say, "I can't afford to pay sales tax," and then you get this weird look of like, "What are you doing, spending the state's money?" That is what a liability is. You're holding it on our behalf. That was never your money to spend.
It's a temporary loan. It's not your money to spend.
Right. So and the same thing lends through with payroll liabilities as well. Some are expenses and some are just withheld for a little bit, and then you have to pay those things to zero them out.
And when I'm setting up and cleaning up and mapping and fixing all that stuff for payroll, I do the same thing for payroll expense, because the word payroll expense is not enough for me. I want to know what's wages. I want to know payroll tax expense. And if you want to even take payroll tax expense to FICA, FUTA, SUTA, that's fine. But make it map, that makes it easier when you're digging around trying to find something that's wrong. Use sub accounts and make it real clear. Wages is real important. And when you go to do your tax return, if you have officers' wages, separate that out. Because then you don't have to dig in there and find it. Exactly. And the other thing is, when you do file your W-2s, you want QuickBooks to match the totals. And if it doesn't, you need to be able to explain why. It might be related to accruals or whatever, but you've got to have, backup. So that's where that notebook idea that I had, you want to make sure that number makes sense. And in January, those withholdings, the borrowed money, is paid to the right agencies: sales tax, payroll tax, state, federal, that your customer or you're not having a bonus on those. Don't do it.
Now, we might have just want to time out here in our list here that we're going through. We may have totally screwed up this going Facebook Live on the event. If we just, if you started watching it and it can't cut out, or if it just picked up where we thought we were,
it's 2020.
I'm gonna re-edit this and post it in our YouTube channel, and then reshare the link so that you can, if you need to, you can rewatch the whole thing from start to finish. But I am putting in some of the prior workshop Wednesdays that we've done, where we've talked about some of these things of how to clean up, like reclassifying multiple transactions that may come up in any of these processes that you get to. Okay, well, I just need to recategorize these things to the right account. Those tools that are in there are going to be available, and you can review those workshops. So again, apologize for the technical issues that we had with the live. I see we currently have 12 people watching.
Yay, that's
really
good,
cool,
considering we ran and came back.
Yeah. So something's working right. You're all there. So hello.
And you just reminded me of one that I don't even think is on there, but it should get a special call out. So auto expense is one where things get lost and caught, and you might be on mileage method versus actual, and you might have to adjust it. So I really like to create sub accounts so that when you pull that P&L and you're looking at last year to this year, have gas separated from maintenance, just auto expense, and then a sub account: gas, maintenance, property tax that may be deductible in a different spot,
right.
And so forth. And same with travel. Travel is another area that the tax return people, if that's not you, really want to know what was, meals and entertainment and that sort of thing. So keep that as clean as you can. and try to train your client to keep those receipts, to say who they took where and all that sort of stuff. Keep
Right.
miles and all that good stuff. So
yeah, and you do have mileage as the last part.
ah,
Just one of the things I want to point out about mileage is mileage is not an expense, right? So a lot of people will contact in and be like, well, where's the mileage expense report? Well, no, it's really, you track mileage so that you can take that as a deduction, but it's not going to show up on your
actual, but
profit and
not
loss.
both. Yeah.
Right. It's to do the comparison of, do I take the mileage deduction or do I actually deduct the actual expenses of my automobile?
And it's adjusted for personal use. So it's a messy account that you want to work with your tax preparer with,
Right.
but track your miles so you know what percent you're doing personal or not. Somebody even said, I saw this today, take a picture of your odometer tomorrow. Got to have a starting point.
Good best practice.
Yes.
And then meals and entertainment is another thing that always gets it changed. But
changes
2 years
all
ago,
the time.
but it changes all the time, right? So there's like a 50%. There's a 50% versus meals versus travel, right? I mean, it's
ugly. So what you want to do is verify with your tax preparer, because it changes so much. I don't even know the answer, but here's what you want to do: separate the meals and entertainment for your staff. And in that land, you want to make sure you invite all of them. Don't just pick your favorite person. And then meals and entertainment for your clients when you take them out, which hopefully nobody's doing that right now because of COVID, but that's a side note. Then the third thing, and unusual that we're talking about travel, with your travel expenses, separate out your meals. And then there's this per diem and all these things. But if you keep it clean on the P&L, your tax preparer person, hopefully isn't you, will know what to do with that and handle it in the tax program they use. And it knows all those 50% and all that, and fixes your retained earnings and all that stuff. Right. You can tell I don't like doing taxes.
That's a good best practice, though, is that, you create those individual accounts that will line up with the tax preparer's creation of the tax return, so that you have each individual one, because travel versus travel meals and client entertainment meals and
employee
your own meals,
and you can't write off your lunch, by the way, right, as much as you want to.
I think that's the idea with 50%, and like half of it you're eating, and you would eat anyway. Yeah. Half of the meal you'd be eating on your own, so you don't get to write off your own sustenance.
But another good practice, if this is for your own books or to tell your client, this is what I like to do. Of course, you'd want to keep all those receipts and manage that, and that's another workshop Wednesday. But at a minimum, in the memo, you can say, Carrie and Dan met to talk about the website changes, that kind of thing. Put notes in there so that if they come back to audit these areas that send red flags, you feel prepared. Right. So.
And both QuickBooks and online and desktop have the ability for you to snap a picture of the receipt and upload it and attach it directly into your QuickBooks. So
but make that note. Make those notes.
But you got to make a note on it so you know what that is. Can't
take your family to Disney World and just snap a picture and get the write-off. It doesn't work. It won't work in an audit. That part I can recommend to tell you.
It won't hold up in court.
No. And you don't want to have those expenses get removed, because what does that mean? You have to pay taxes. We don't like taxes.
So you have a couple other things here that we want to talk about a little bit. Reconciliation of the credit card statement.
Yes.
That is, same as the bank account. You want to treat your credit cards like a bank account and reconcile them. There are multiple ways that I've seen people creatively track credit card expenses. They wait till the statement comes, they enter one big bill. Well, that doesn't recognize any expense until you enter in the bill. Or they just write a check and then itemize and split out each category on a check, because when they go and pay the credit card.
I don't like either one of those.
Best practice is to treat it like a bank and reconcile it when you get the statement. You have it connected to your bank feed. The transactions come in and they're expensed as they happen, and then
you reconcile.
And then you reconcile it, and then you pay it.
Make sure there's no lingering old entries that haven't cleared. Those are mistakes. And then make sure your accounts payable, if any of those apply to that, you can run the workflow, but make sure you're not putting it in twice. I've seen those mistakes too. So that's why it's important to go down your balance sheet.
Right. And then you have year-end balance on loans. Talk about that. What do you do in there?
So you may be writing checks to, you have a $30,000 loan to Bank of America, you're paying $500 a month to. Some of that is going to include interest, some of it's going to include principal. So the best practice is to have an amortization schedule to tie it all down and so forth. Reality is we don't have time for that. We're just running the check to the loan. And to me, the easiest, fastest way is to call that bank, find out what it is as of the end of the year, and adjust it back to interest expense. If you're doing it correctly, it should match the 1099 interest statement you get from the bank. If it's not done correctly, then get an amortization schedule and do it the slow way, breaking out principal and interest expense.
Awesome. And then one thing I want to button up with this year-end review. Let's say you just want to start with a line in the sand and just say, well, I've got last year's tax return, and I want to, start from that point. Or after they've done their taxes, you want to start their QuickBooks file anew, based on that tax return. We've done a workshop on how do you do that, right? So how do you tie a QuickBooks file to a starting point, whatever that happens to be, and we've created
did a course on that.
Yeah, we've done a download, or we made a download available on School of Bookkeeping, where it's just a spreadsheet and how you copy and paste the trial balance from the QuickBooks, and then tie that to the tax return, and then it does the calculation, adjusting entry for you, and then we even put it in a Transaction Pro importer format for you so that you can import that transaction into QuickBooks. So I'm going to put that link in the comments.
Keep in mind for that, that's kind of your quick and dirty approach, but you still want to go down to the details of what lingering items, outstanding checks, open AP, open AR, and those payroll. And so I did a course in both desktop and QBO on what to think about for each one of those accounts. And you can pick apart the course on what you need. You don't have to go through from beginning to end.
And then sometimes at the end of the year, you realize, oh, I've been undercharging, right?
Yes.
Or I need to make some changes to the business practice because you've kept up with all of your bookkeeping, and oh my goodness, I need to charge more. And unfortunately, that's what we looked at in our books. Hey, we need to up the price a little bit. So actually, effective January 1st, the basic level of the School of Bookkeeping membership is going to go up. So if you're seeing this before the end of the year and you want to enroll, you would lock in the current pricing. But if you wait until after January 1st, then the price will go up, and then you'll be locked in on that pricing. So if you want to enroll, you can enroll for a free month for on the basic. Check us out, check our courses out there, and we'll see you next week on another Workshop Wednesday. Hopefully we'll get it right this time with the event and the live streaming. But we'll upload this to YouTube and share that so you, in case there is a pause somewhere in the live feed, you can watch it later. Carrie, any last minute year end comments?
No, I hopefully the checklist will get you thinking on what to do. And like you even said about raising prices, if you're doing this for your customer, it's billable. So make sure you're doing that. You can also, another good thing to keep in mind is that when you're offering this cleanup service, you might be able to partner up with some accounting firms that do taxes, and start with who your clients use. They might refer people to you when they see, I've had so many tax preparers say, thank you so much. You've made my life a whole lot easier. This helps the client. It's a win-win. They can plan. They know if they need to pay out write out year-end expenses right now before tomorrow, by tomorrow. It's a good partnership to build your practice and grow.
Awesome. So we will see you next week, next year.
Next year. Everybody make sure you have all your luck stuff in a row. Do a good job. Be safe.
Bye-bye and Happy New Year.
Bye-bye. Have a good New Year.